Ladies and gentlemen, good day and welcome to the Eldeco Housing Industries Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY Investor Relations. Thank you, and over to you, sir.
Thank you. Thank you, everyone, for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with a business risk that could cause future results, performance, or argument to differ significantly from what is expressed and implied by such forward-looking statements. Please note the results and presentation are available on the exchanges. Should you need any assistance to receive them, you can write to us and we'll be happy to share them with you. Today, we have on the call the senior management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Rajiv Khurana, Group Vice President, Accounts and Taxation. We'll begin with the highlights of the quarter, followed by Q&A. Now I would like to hand over the call to Mr. Pankaj Bajaj for his opening remarks. Over to you, sir.
Thank you, Abhishek, and welcome, ladies and gentlemen, to this earnings call. So we have commenced FY26 with strong sales performance, underscoring positive market response to our new launches and continued execution strength across projects. This quarter was marked by a sharp increase in bookings and healthy collections. So I'll just run through the key operational highlights. So the booking value in Q1 FY26 stood at rupees 221 crores, a 274% year-on-year increase, driven by successful new project launches. In terms of collections, we collected rupees 78 crores in the quarter, marking a 41% growth year-on-year. Deliveries were around 85,000 square feet, comprising 101 homes handed over in the quarter. These were mostly EWS homes and other smaller homes. So in terms of value, it wasn't much, but volume was high. Construction expenditure stood at rupees 39.3 crores, up 10% year-on-year, reflecting the continued progress across ongoing projects. We expect this number to rise significantly in the coming quarter as we ramp up the execution in the recently launched projects. We achieved key project milestones in Q1 FY26. RERA registration of Eldeco Hanging Gardens was secured, and the project launched on 15th April 2025. Nearly 84% of the inventory was sold within a week. Similarly, Eldeco Skywalk received RERA registration and was launched in the second week of April. That also received strong market response, and sales are still continuing. Looking ahead, we plan to launch a flagship integrated township, Eldeco Solano Gardens, on New Jail Road during FY26, which is the current year. Spread over 50 acres, it will offer plots, villas, and multi-story apartments, and it has a gross development value of over rupees 1,000 crores. We expect it to be a flagship project for the coming few years. We remain optimistic about the rest of the year, backed by strong launch pipeline, robust customer demand, and healthy execution progress. With the successful launches of Eldeco Hanging Gardens and Skywalk and the upcoming launch of Eldeco Solano Gardens, we are well positioned for accelerated growth and improved financial performance. So we expect the numbers to be much better in the coming quarters as we ramp these projects. So those are my opening remarks. I will hand it back to you, Abhishek.
So can we start with the Q&A session?
Yes, we can proceed with the Q&A.
All right. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Aryan Singh from Alpha Accurate Advisors. Please proceed.
Thank you. Thank you for your opportunity, sir. So with reference to the presentation, as I can see, like in the last 1 year, our average realizations have been around 6,500 per square feet. So is this pricing sustainable, or with the launch of premium projects, should we expect an increase this year? If so, can you please share approximately in what range it would be?
No, I think this is a sustainable, stable rate kind of realization. You would have seen in the presentation that this is a sharp rise from what it used to be 2 or 3 years ago. I think we had some place in the presentation. Yes, I have it in front of me. The realizations have gone up quite sharply. Yeah. So it used to be 3,500 rupees in FY20. By FY23, it went to 4,500, and now it is 6,500. So if you the last 2 years, there has been a nearly 30 to 40% increase in the average realization. So I think this is the new normal, and I wouldn't expect it to be much higher than this in the coming year also.
Okay, understood. So one more question, so can you please highlight few primary drivers behind this strong growth in booking value? So was it largely driven by specific projects like Trinity, Hanging Gardens, or improved market sentiment in Lucknow towards ultra-luxury projects?
So the demand, as we've been saying in all our previous calls, have been quite strong. It was our inability to, first, I think, for a couple of years, we struggled. About 5 years ago, we struggled with adding to our launch pipeline. Then we took some time getting the approvals. So we had been quite transparent with our struggles on that front. Luckily, we unlocked all that in the last year or so, and then the RERA approvals finally came through this quarter. And there was a lot of pent-up demand for Eldeco products, and obviously we have a strong brand recognition in the market, and our execution is well trusted by the market. So we feel that if we continue to launch projects, it is going to continue to get developed very well. So it's not something which has changed suddenly. It was just that we had not been able to launch significantly in the last some quarters. But now that has got unlocked, and in the coming quarter or maybe the quarter after that, we are going to launch our big project, Solano Gardens, which will have multiple smaller sub-projects also. So that problem is solved. So we think that this number is now sustainable.
Okay, sir. So that's helpful. Thank you so much. That's from my side.
Thank you. We take the next question from the line of Karan Premchand Gupta from Cavi Capital. Please proceed.
Yes, thank you for the opportunity, and congratulations on a strong quarter. A few questions from my side. First one on the construction progress. While, year over year it's a 10% increase, but it doesn't seem very strong compared to the prior quarter. So could you just talk about some guidance for the year and how you see this going ahead?
Yeah, glad you asked that question. I was hoping somebody would ask that question. So the thing is that the execution, the construction follows the launch of the project. Obviously, once you get all the approvals, you go for the RERA approval, and you in the business model, we launch the project and then we build it over the next 3 years or something. So as I already responded to the previous question, that the last 3 years we were somehow, there was some bottleneck in terms of launches, which has now got unlocked. So you see that in our last year bookings numbers, this year's booking numbers, and construction and execution follows with the lag. And in my opening comments, I already said that now I expect the construction and execution numbers to ramp up significantly because the projects have got launched and they will have to be now built. Luckily, we have the booking numbers to back that. So advances from customers should also not be a problem. In the coming quarter, you would see that to ramp up significantly.
Great. So, would this be, around 50 to 60 crores a quarter, or can you put some number to it?
I don't have that number ready, but we can come back to it. See, all the bookings that have been done, like Hanging Gardens, Skywalk, our plan, Latitude 27, all these have to be executed in the next 3 years. So we'll have to work backwards and see what that number will be, but it will be sharply higher than what it is right now. Let me come back to you with the real number. You can follow it up with the booking numbers which are given. Last year, so I'll just rattle out the numbers to you. The value of area booked in FY23 was 92 crores, FY24 was 388 crores, FY25 337 crores, and Q1 of FY26 is 221 crores. At some point, now it is going to start to ramp up because we have these bookings and these projects are in nascent stage in terms of execution. All this execution has to happen in the next couple of years. I can't actually say what that number would be. As I said, I will come back to you, but you can see the gap between the value of the bookings and the execution. So all that, yeah.
Great. Thanks. Then a few updates on the other projects. So Bareilly, Latitude 27 and Trinity, the booking numbers are quite low compared to the availability. So can you just tell us on the status of those projects?
So Trinity, definitely the sales have been sluggish for the last few quarters, but we expect them to ramp up. We are making a show home at the site, and we have deliberately gone a little slow over the last couple of quarters, and we plan to kind of relaunch the project in next quarter or so when we make the show home, and I expect the numbers to be much better. Latitude 27 is pretty good actually. I don't know why you say that it's being slow, because it's at sustenance stage. So we are already sold out 65 or 70%. So that's fine, and we are still building the structure, and we expect the rest of the project to be sold out by the time we reach completion, and which is what happens typically. Bareilly, I believe we will be unwinding that transaction soon. We'll come back with further details when we have that. So that was so we'll be unwinding that. How we will come back to you probably next quarter or the quarter after that.
Okay. Yeah, Latitude 27, just, according to our calculations, it looks like the bookings were about 4,500 square feet this quarter compared to, about 35 to 40,000 in prior quarters. So that's where that question stems from.
Very good question. The answer to that lies in the location of Eldeco 27 and Eldeco Skywalk. What happened was that Skywalk is both of these are located within Eldeco city, and with the launch of Skywalk, some of Latitude 27 bookings got cannibalized, I think, because it was a newer project, price slightly lower than 27. So some of the bookings went that side, but overall Eldeco city did well. So it was, I think it was in reaction to the launch of Skywalk that bookings dipped in 27. But once Skywalk enters the sustenance phase. Hello?
That participant is out of the queue.
Oh, okay.
Yeah.
So we can take the next.
Yeah, I will. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1. We take the next question from the line of Priyank Gupta from Guardian Advisors. Please proceed.
Yeah, good afternoon, everyone. My question is, we would like to know, in terms of Lucknow market, how do these booking hold? That I mean to understand the market share and whether our competitors were able to do it better than us or worse than us.
So, Priyank, the data of the market is not very reliable, but from what we can source from our sources and whatever research reports we've seen. Can you hear me, Priyank?
Yes, I can.
Yeah.
Yes.
So we believe that the overall number in Lucknow is about 5,000 crores a year of sales. and we are doing about less than 10%. And we believe that overall the market is, we have opportunity to expand the market share, and more importantly for the market itself to expand. That number is very low right now. And as I've been saying in the previous calls, it is, I think, not because of lack of demand, it is because of lack of proper supply. But as it is getting, supply is getting debottlenecked, I expect the market size to expand sharply. So
can you throw some light on the rank we would be there in Lucknow market in terms
I
of?
would not know for sure. I don't have access to our competitors' data, but I would expect it to be in the top 3 or top 2. I don't know.
So the next question is, you just said that probably you will be winding up Bareilly transaction. So do you think that experiment of going out of Lucknow did not work, and probably we should now not consider going out of Lucknow?
So 2 parts to that question. First, that Bareilly didn't work out. I think that was a project-specific thing. So I would not say that the experiment per se failed. That project did not work out. So I don't think that experiment failed. We will be trying the Gorakhpur market soon, probably. But the second part of the question is, do we need to look outside right now? Or when I say that the market size in Lucknow is going to expand significantly as supply gets debottlenecked, so should we be going out at all? But I think with Solano Gardens and some other locations that we're tying up, we've hinted at those in our presentation. I think our hands will be full for the next couple of years. So even though the experiment, I would not draw judgment that the experiment has failed, but immediately I think we should be focusing on the Lucknow market.
Thank you so much. My best wishes. Thank you.
Thank you. We take the next question from the line of Raj from Arjav Partners. Please proceed.
Am I audible?
Yes.
Sir, with the ongoing side, how much will be our total GDV?
We don't declare our GDV numbers. We do declare our saleable area, because GDV also, so GDV has a component of your saleable area, and it has a component of what price you want to sell it at. We don't like to put a price that we want to sell it at out there, because it's subject to so many things. But how much gross development area we have, GDA, I think it's there in the presentation.
Yeah. So, sir, is it fair to assume your current sales per square feet into GDA should give me a rough estimate of GDA?
I have already said that that seems to be the new normal.
New normal, all right.
Yeah.
And sir, how much EBITDA percentage we operate on the ongoing side?
So it depends on what kind of project mix we have at that particular point in time. But generally it ranges, weighted averages between 30 to 40%. 40%.
30-40% EBITDA percent, all right.
Yeah.
And sir, how much cost is pending for completion on the ongoing GDV side?
I don't have that number ready. Sorry.
All right.
If any of my colleagues has it, you can give it. Rajiv ji, Manish.
We'll get back on this number, sir.
All right. Yeah. Thank you.
I hope that's okay, Raj.
Yeah.
Okay.
Thank you. We take the next question from the line of Runit Kapoor, from an individual investor. Please proceed.
Yeah. So I have a question in Eldeco Latitude. Hello. Am I audible?
Yes, please.
Yeah. In Eldeco Latitude 27 and Imperia Phase 2, there's been a reduction in the value of area booked, I think. So was there cancellation during the quarter, right?
No. Latitude 27 reduction in area.
Reduction in the value of area. Like so, in this new presentation is showing 177 crores, and earlier presentation it showed 183. And for Imperia Phase 2, value of area books was showing 299 in the earlier presentation, but as of now showing 275.
I'll have to get one of my colleagues in here. Manish or Rajiv, can you explain this? Kapil? Is Kapil there?
So, sir, some of the units may have gotten cancelled due to our push on the allotment.
Okay.
But the gap should not be that high.
No, it's around 25 crores, so like around 10% of your in Imperial Phase 2 housing.
So some cancellations do happen during when you press, if there are some chronic defaulters, you press them for payment and they do not pay us. So it's a routine thing that they do. We end up cancelling them and temporarily your value of area booked goes down, but correspondingly your area left for sale increases. But let us, I don't know if anybody has a ready answer to this. We can get back if that was exactly the reason for it.
But your value of area booked has not decreased. That's only.
So the value of area booked would decrease if cancellations happen.
Yeah, but that's not decreased. So and your value, I mean your amount, like the total number of area booked, like in square feet, that is not decreased, but your value has decreased.
Then we have to get back to you.
Yeah. Okay. And
thanks for pointing this out. We should get back to you. We should have an answer for that.
Sure. And one more question is regarding what is the anticipated construction cost expected during the year?
So we did 30 crores of execution construction cost in this quarter, and I think it will ramp up sharply. I would not like to. Somebody asked me this earlier. So this 30% should be increasing gradually every quarter. So I think it should stabilize at about 50-60 crores by the end of the year. Which quarter, how much, I can't really say.
No, for the whole year, I'm saying like FY26, like 120 crores.
As I said, per quarter, it should be ramping up from 30 crores to 50 to 60 crores by the end of the year.
Okay. And one last question was regarding your EBITDA margin had fallen sharply during the quarter. So was it because of Imperial Phase 1?
It was because of the mix of projects which got recognized for revenue. It was largely low-income housing and EWS units that we are statutorily required to build. So some of the revenue recognition is with respect to that. The other thing which happened was that we did two big launches, Skywalk and Hanging Gardens. And the way we do our accounting, we treat the marketing expenses for new launches as period costs. So they have got booked in this quarter, but the sales and booking which resulted from this marketing push, that revenue will get recognized in future quarters. So it's just upfronting of some project costs which has happened here.
Okay. Yeah. And just one more question was, any update on the loan to the related party transaction? Like, have we received the money? Like...
No. I think I'm not, unless this will have to go to the board and all that, but we expect it to get unwound in the next couple of quarters. We have not received the money back, but we expect it to happen.
Okay, fine. Thank you. That's it from my side.
Thank you. We take the next question from the line of Karan Premchand Gupta from Cavi Capital. Please proceed.
Yeah, thanks for the follow-up. I got disconnected. I had a couple more questions. One, is it possible for you or your IR team to give some kind of waterfall for revenue recognition going forward, or just give some guidance as to when you expect to see a higher revenue recognition? Because the collections and sales have been good over the past few quarters, but it's somehow not flowing down to the income statement.
So as a policy, we don't like to give out a number, but it is not rocket science to just see that, your booking numbers generally, and I'm commenting about the industry and the way revenue recognition happens. Generally, it happens, your booking numbers start translating into your revenue recognition with a lag of 3 to 4 years. And our sales uptake, if you see the numbers, started happening in FY24. So FY24
Mhm.
was great, 388 crores, FY25 was 337 crores, and Q1 of FY26 is 220. So I think this year will be our best year ever in terms of bookings. But obviously, it follows into revenue recognition because we follow the accounting standards, and we recognize revenue only when the risk and rewards of the properties are transferred to the lottery. So that happens with a lag of typically 3 to 4 years. So next year onwards, FY27 onwards, the numbers should start looking very good. And I think even towards the end of the year, we will have a much better number because Imperia Phase 2, we are going to be applying for the way things are at site. We are going to be applying for completion certificate in another couple of months, and we expect the completion certificate in another couple of months after that. And we will be offering positions to our customers. So all that revenue should get recognized in FY26 itself. So this is quarter 3 and 4 of this year.
Okay. Also for this, the Trinity project, it looks like the expected completion is Jan 27 as per the presentation. Is that right?
We'll have to revise that. It's been a little slow. So I think it will get pushed out to Jan 28 maybe.
Then quick update on Solano Gardens. So when you launch it, is this going to be done in phases?
Yeah, it will be phases. I expect it to be a 5-year project.
Okay. And how big is the first phase going to be?
First phase is going to be the plots and villas. So the GDV there will be about 300 to 400 crores. That we expect to do within this financial year.
Okay. And just one last question on construction again. Some industry players have talked about labor shortage. Are you facing any similar issues on your sites, or is everything okay there?
Luckily, not in Lucknow, because Lucknow, not that much in Lucknow. But as you know that we also do some other work in other cities through our other companies. So because Lucknow is in UP and it's close to the supplier geographies of labor, it's not that bad. But the situation is much worse in the rest of the country.
All right. Thanks. That's all I had. All the best.
Yeah.
Thank you. We take the next question from the line of Manan Patel, an individual investor. Please proceed.
Hello, am I audible?
Yes, please.
Thank you for the opportunity and congratulations for good launches. So, in this presentation, I could not find any mention of the land aggregation bit. So, are we going deliberately slow on the land aggregation, or the prices of land have appreciated so much that we don't find value? So, if you could comment on that.
No, there is a disclosure on land aggregation. If you see the slide on forthcoming projects, the bottom half of the slide does talk about land bank for forthcoming projects under planning. Aggregator, which is about 35 acres already. And these are in 3 different locations and they're under further aggregation. So land aggregation is a time-consuming thing for various reasons, especially when farmer holdings are small. But it has to be done, and we are good at it. We have been historically good at it, and that's partly the reason why our profit margins, EBITDA margins, tend to be much higher than the industry.
Understood. Also, the question arose because the land was same in last quarter and this quarter, so just wanted to check on that.
There has been some temporary kind of slowdown on that front, but as we speak, it is getting unlocked. Hopefully, we'll have much better news for you in the next quarter.
Great, sir. Thank you and wish you all the best.
Thank you. We take the next question from the line of Suhas, an individual investor. Please proceed.
Hi, am I audible?
Yes.
So, couple of questions. One, I heard that we don't consider our Bareilly project a success, and we're trying to resolve something there. Can you share more context? What is the issue there and how are we resolving it?
So we made some investments there, and the project took longer than it was supposed to. And there were also some land issues which erupted later on, which we tried to manage along the way. Unfortunately, we've been able to resolve all those matters, and the project has received completion certificate for part of the project. But unfortunately, it took much longer than we thought it would take because of all these local problems. And luckily, we are protected in terms of a minimum guarantee, which Eldeco Infrastructure had given that come what may, the EHL is going to have a minimum return of a certain percentage. So we believe that transaction is going to get unwound, and we are not only going to recover our principal, but also a decent return on it. So that's where it's at. It's not, we had a floor return, and then we had unlimited upside. That upside did not come through.
Understood. But as of date, the project is open for sale and it will get sold and realizations will get made. Just the saying returns are going to be probably lower than what an ideal case would have been.
So returns would be lower than what an ideal case would have been. And so we are in talks with the company in Bareilly for the unwinding of this transaction. We expect it to happen. We'll come back to you on the exact date, but we expect it to happen in the next couple of quarters.
Okay. And by unwinding, it means that we will not sell the remaining part of the project, but just
we get our money back, or we get our money back, or we get some arrangement, and not only do we get our money back, we get our money back with the minimum committed return, which was committed to us at the time of the transaction.
Understood.
Yeah.
Just another question, which is for this quarter, which are the projects where we have recognized revenue, maybe for this quarter and the last quarter, if you can share.
Sanjeev, can you take that, please?
Yeah. For last quarter, we basically, in this quarter, we have recognized Regalia and Twin Tower and this EWS Suction and Eldeco Imperia 1, Phase 1. And if you talk about the last quarter also, we did the Regalia, Laksa, and other inventory of old projects, and then Regalia again, Uday, Twin Tower, and Saksham, and also Eldeco East End at Shoria. These are the projects.
So Swat, it's largely scattered inventory across projects which got recognized. Bulk recognition will happen in Q3 or Q4 when we start recognizing Imperia Phase 2. Right now, it's just scattered inventory. That's how the numbers look like.
This is very helpful. Understood. It would also be good if we can have the unsold portion of these projects listed somewhere, maybe as a total, even if not project-wise.
Unsold what?
So I'm assuming this is because these were apartments which were not sold or not handed over, and hence the revenue is coming in now, while the overall project has received completion certificate in all these cases. So it would be good is it possible to put that number somewhere? What is the unsold inventory of these old projects?
I think you're talking about unrecognized inventory. So in our parlance, when we say sale, we mean booked, where a customer is already booked and paid part money. And recognition happens once the entire payment comes or majority of the payment comes, and we offer the position to the customer. So I think your question is on the recognition part. That's a good suggestion. We can probably do that. So till now, we've been disclosing the value and area of the part which is booked and non-booked. You're talking about recognized and not recognized.
Yes. In a way, you can, yeah.
I think we can insert that disclosure. Let's try to amend our presentation format. Yes.
Thank you so much. This will be super helpful. And congrats for the great quarter on sales front.
Thank you.
Thank you.
Thank you. The next question is from the line of Anjali Singh from Bansal Family Office. Please proceed.
Yeah, hi. Thanks for the opportunity. Hello. Am I
Go
audible?
ahead. Yes, Sanjeev, please go ahead.
Yeah. So my question is, say current EBITDA margins with 17.6%, how do you expect this EBITDA margins to trend in coming quarters with the continued growth in sales and booking value?
I think we've already answered that question. The EBITDA margin this quarter looked low because of the mix of projects which got recognized for revenue, number one. And number two, because of front-ending of the expenses related to the launches of Eldeco Hanging Gardens and Skywalk. So we have expensed the expenditure in the sales and marketing, brokerages, etc. So the EBITDA margin is looking low. Going forward, it should revert to its mean of about 30% or probably even 40%.
Okay. So I would like to understand the margin profile of Eldeco Skywalk and Hanging Gardens. I mean, since they are the big launches in FY26 and Eldeco Solana Gardens is also coming up. So what would be the margin profile for these? Are these expected to give us the higher margins Y on Y? Or can you please share some thoughts on that?
So Hanging Gardens and Skywalk are both in the range of 30 to 40% in terms of EBITDA margin. And Skywalk also I would expect in that range. As I said, it will revert to the mean of historically we've been doing 30 to 40%. It will go back to that when we start recognizing revenue in a big way. Right now we are recognizing revenue only for scattered inventory and expensing all the project, many of the costs as period expenses. So it doesn't look below, but actually they are in the range of 30 to 40%. They will start showing soon.
Okay, sir. Thank you so much. Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thank you for your questions. It's obvious that you've been following the company very closely. Please continue to do that, and we continue to work hard and hopefully show you much better numbers in the coming quarters. Thank you, ladies and gentlemen.
Thank you. On behalf of Eldeco Housing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.